Good evening, my name is Mirko Ulbrich, and in the next 10 minutes we will look through a new Tradestation strategy. So before we start, I structured the workspace in the way that in this first row there are 3 silver strategies, in the second row 3 gold strategies, and the strategies, let's say, will get more detailed from the left to the right. And so we start with at the very right, and here you see the base strategy. The base strategy is just 2 entries, one short entry and a long entry, and the positions are always skipped. And what you can see here, that's a strategy which is very easy and just has 4 inputs, and I can guarantee that it is not more than 4 inputs. If you test the strategy over 10 years, from 2003 to end of 2013, you can see that the strategy delivers a relatively smooth build-up in equity. And when we looked into the details, we can see that the strategy made over 10 years approximately $840,000, which is an average trade net profit of $276, and I included for a single turn $27.5, and this is approximately on a round turn $55. So for each trade I had a cost of $55 included, and I tested on an intraday minute resolution, what means that it is should somehow match the reality. And what you can see here is that the strategy can very well follow the moves of silver. So first, this is a very easy concept. What I did here, I optimized the 4 input parameters of the strategy without anything else, and then afterwards I put a stop loss of 9,000 in, because after 9,000 it never went back into profit. So I don't cut a single profitable trade, but this is a very raw concept, and this is just 4 input parameters, a very easy strategy. The strategy is just 4 lines of code. And what I did then I optimized all the things together. All the things together means the stop loss together with the strategy input parameters. And I came to this strategy graph. And what I did in addition is that I don't backtested it for 10 years, because 10 years is too long. And if you backtest on 10 years, you have to, or the old data will have an over proportion in your backtest. I backtested here for 2 years, and you can see for 2 years it's a profit of $291, and the average trade net profit increased to $225. And here I also included the same slippage and did the same way to calculate it. And when you download the workspace, you will see that I included the things which you normally need to get good results. And this is, for example, a stop loss, a percent trailing, and a percent trailing. And it's not turned on here, the percent trailing. A percent trailing is made in the way that you define a profit, for example $2,000, and how much you trail, how much you are willing to give away. And of course, if the profit is reached, it begins to trail and only accepted X% to give away. That means you bring in a specific profit. The same is true for the trailing LX and trailing a short, which are typically used on soft commodities. And when you look in here, you see after 10 bars, it will lock in a profit of $1,000. But this is all turned off, and in addition, you can see that I inserted the entries doubled, and currently only this entry is turned on, and I inserted it doubled because with this you can separate between the long and the short side. For example, if you only want to trade the long side, you would put here exit only, then you only have a long strategy. And on the other side, if you want to, and of course if you optimize it now, you will have the longs optimized. And then with this you can optimize the shorts. And for example, you use here sell short on, and here exit only. Now we have a strategy where the longs and the shorts are separated, and where each can be optimized in separate. I turn it off again, because, and of course, if you do it, you could also put these ones off. These ones off here, and then you only go in, buy here, and you only sell here, and then the other exits will take over. Okay, but I put it off here because I handle the long trades the same way as I handle the short trades here. You saw the performance graph here, and now the last one. I think the last one is quite good, and what I did on this one is I included the entry on, the percent trailing, and the stop loss. And it's possible that the results here are different from the results which you see when you download your version, but this is done because you have to try your own version. And if I look into the losses here, I see that most of the losses are, maximum loss is 4,000, but I think, or I tested the concept, and you will be able to make a strategy which has only losses in the 2,500 to 3,000 area. So when we look into the performance graph is quite good. Of course, I included again slippage and commission, and here we have an average trade net profit of $400 and a total net profit of $327, and I only optimized it for 3 years into the history. I think this is a good setup for the strategy. So here you can see you get this strategy graph with a high average of winning trades. I did the same for the gold here, and first I only tested the pure entry over 10 years. You can see here it's a little bit more rough, but in general it's a good graph. Then I added a stop loss. I simply added a stop loss, and here I added also a trailing stop. So let's have a look. When I added the stop loss, my average trade net profit went up to 256, and here it went down to 285. I would assume that if you use the channel trailing long, channel trailing short, you would get better results on the gold. And of course, if you split in long and short exit, it will get better. So I'm currently testing the strategy also on, for example, US bonds. And the strategy in general, it does not behave bad on US bonds. You can see here, it's from end 2008 to end 2013, approximately 5 years. And the average trade net profit is somehow okay with $100. I think the US bonds are very liquid, so they don't have a high slippage. Maybe it's possible to trade with this. Also, I tested the strategy on the FDAX. On the FDAX, I choose a long only setting. And on the FDAX, this is a performance graph. And the average trade net profit is 361. The average, the FDAX is a relatively big contract. For this, you would need some average. And it's just the entry and the stop loss. So it's not so much. And for example, on the S&P mid cap, I tested the strategy in the long and short settings, or in the long only settings, and the average trade net profit is a little bit low for 79, but the performance report looks, let's say, somehow good. So if you are interested to test the strategy, please send me an email, and in the email include your customer number and your network ID. And I need this to enable the strategy in the strategy network for you. And the reason is it's not a strategy which will be officially published in the strategy network, because I just look for a couple of people who wants to trade the strategy or who may want to buy the strategy. And for this reason, I will limit it to maybe 2 or 3 people which I will give the strategy. Send me your customer number and your network number, and you will get the strategy for free for a month. So I wish you success in trading and say goodbye.